Hi folks, Nick Shaheen here recapping the week ending 5/15. Um, the week ended on a somewhat of a stale note following a very strong Thursday in the markets. The fact that there was no follow-through on Friday showed a little disappointment and lack of commitment from the bulls. Even the bulls themselves, early action showed that there was selling, and they were so disappointed with it, almost disgusted. These are actions of somebody that's ready to give up. However, the setup for next week is still on the bullish side, so I wouldn't bet against the bulls yet. I could do the range-bound trade, so this is going forward. I believe the range-bound trade is still available for cautious and active traders. Slower traders should stay out further out in time. So if you're doing spreads, don't try to play the weeklies. You can play the weeklies, but out in time, not the current week. So the ranges are still at play for next week, in my opinion, just about where they are right now. This week we pinned them. I think the most important thing to look for are the small caps. The small caps are key. They were key this week, I think, because they speak of it's a basket of 2,000 stocks. So you look at this batch of companies versus if you look at the Dow, you can count them on your hands and toes, and you and your brother. So the small caps are a better gauge of, quote, the market. Today they were the only red index that I was looking at, so it kind of speaks to it. However, the setup for next week, and let me jump in here, this is the S&P, this is the Qs, NASDAQ, and these are the small caps IWM. And you can see these are weekly candles for 1 year. So every candle is 1 week. Yeah, we had a green candle as well, higher lows, higher highs. So this is the S&P, so continuation there. We have record closes in the SPX as well. So there's strength there, and we're still skirting the bottom end of it. But you can see how we're tapering off the slope. But that usually builds up energy, and since we have higher lows knocking on a roof, if the roof breaks, boom, they break towards the 220. In the SPY with time. So 215 might be a next target on a mega breakout. The mega breakout setup has been here for a while with the red carpet. However, every week they shy away from taking it. Yes, they're setting new highs, but in a shy manner. Evident here in the Qs. This was the recent high not too long ago, and we've set 2 red candles and finally a green candle. Skirting losing the bottom end of this trend right there. Still, we have this one going on, but lower highs, higher lows, again squeezing, supporting the possibility of a mega breakout or a breakdown. And we're on the verge. Why? Because we're trading sentiment. Nothing has changed in the facts. They're exactly the same. There's no QE here. Rates are going to go up now or later. It doesn't matter. They're going to go up. EQE, that's Eurozone QE, going on. China is a mystery. Now they have QEs in China, but I believe that the QEs are not going to spruce up more building. They're going to spruce up financial stuff because you see their market. If I had big money in China, why would I invest to tie it up in physical expansion when I see the market is tripling every couple of days? Exaggeration, but it's, the opportunity there is easier for quicker buck. So I think it's going to spruce up their markets, equities, and that may cause a problem down the line. Up until then, there's a nice trend in the Qs, but it's tapering off also, but the setup is here. It can go either way. When you're trading sentiment, logic doesn't apply. The fundamentals are exactly the same. I leave room for a little bit upside and room for a little more downside, and that's it. That's the range. So the small caps, you can see they sold off hard. They sold off over 4% or just about 5% actually from the high down to this low, and people started buying. So we have 2 green candles now trying to recover this trend. Meanwhile, we have lower highs and some sort of a stabilization here, so the jury's still out. Next week, the fight is in the small caps. That's what I am watching and concentrating on. The outside variables are still the same. You've got the Greek exit still looming. They're going to rehog the headlines soon enough, as soon as the next payment comes up. Also, the extension, the 4-month extension, comes up soon enough. Economies, more questions about over the U.S. health. I think it's fine. It's not great, but it's fine. Rate hike, I think it's still 2015, but there's some people in denial. Maybe definitely not in June, but maybe September or December. Currency, everybody declared the death of the euro, going to parity, blah, blah, blah. Well, here we are with the FXE shows you that that's the euro versus dollar. That it's not the case, and in fact, the euro is ready to break out. As soon as it leaves this green area, it could shoot for this level right here, and who knows after that. So whatever is given just yesterday is not definitely given today. Another one of those givens are yesterday on Thursday, every expert in the media was sure enough that from now on the markets will trade hand in hand with rates and against against rates and hand in hand with bonds. If you remember, about a year ago, it was exactly the opposite. We have a death spiral going. Day bonds go up, tick for tick, inversely related to the stock market. Well, yes, Thursday, everybody was sure that it was going to be the opposite. Stocks are going to move with bonds against rates. Well, today we had bonds over 2% higher, rates over 4% lower, markets flat. So nobody knows anything. Trade your own thesis, trade the ranges you see until the breakout happens or doesn't happen. So as far as bonds, you can track them by looking at the TLT, for example. A quick way of showing you that they're coming back to this pivot line. Not necessarily they're going to break out of it again, but if they do, they can reach for that green line again. The opposite of which are the 10-year rates, for example. We thought they were going to break out of that green one candle, quickly reverse that same day, boom, now we're trying to grab ourselves to not fall down. If we lose this one, we come down to this one, or towards it, I should say. All right, so that's the economy, and I'll just cover up a couple of stocks. I've mentioned Netflix before. When it popped right here, I said it could hit 600 with the first pop. I said 600 is in sight, actually from here. Also, it was evident because they gave it a pass on global expansion, and that was my theory. You cannot short this thing because of global expansion. I said 600 can be like right there. The day after the earnings, I said we're going to hit 600. I think it was 415 or 416. So here we are, well over 600 because of news of expansion, possible expansion to China. Well, that's the idea. Now, technically, it has a little more room to go. Whether the markets allow it to do that or not. So technically, it's worth a lottery ticket that nobody expects, a lot higher than here. I think I'm going to do that, just a cheap one. McDonald's was in the news as well, but we can't ignore Apple. Apple had potential to fight over 130. They kissed it this week. I think the fight continues next week, and that is also going to help the markets because it's a heavyweight. Apple is a heavyweight in all of the indices. I'll show you physically. That's big Apple right there. And not all of them. It's not into the small caps. It is in the Dow, recently added, and it's also available in the S&P 100 and 500, obviously. So Apple is still bullish. Long term, the story is beautiful. If I can't risk money on Apple, I might as well hang it up. All right. Wynn Resorts, don't try to catch that knife. Still has some ways to go. As far as other surprises, there might be a couple of sleepers. One of which is AbbVie, A-B-B-B, whoops, sorry about that, long week, showing some potential breakouts here. Today's candle was a little disappointing. It ended towards the low rather than the high, but if they do shake this, they might be able to reach to new all-time highs. So debit call spread there can pay. As far as other stuff, there's plenty of other little tickers. So if Intercept was one of them, we looked at Intercept not too long ago. We thought it was constructive, and here they are, boom, breaking out. Technically speaking, it was green today, so today ended on red. That's a sour note, but technically speaking, it should be in a breakout and should reach for higher if the markets allow it. Of course, this is pharmaceutical, so anything can happen at any point in time. I'm not committing any money, any heavy directional plays without hedging. So keeping a balanced portfolio in order to play these ranges is extremely important. Meaning if I go long Apple a lot, I should short the NASDAQ a little bit somehow, or the Qs or the NDX. If I'm long this, I should short that. Keeping a well-balanced portfolio is an awesome thing to do. Nick signing out.